Hello, everyone. Welcome to our K-1 Pass-thru entity series. I'm Dave Stauffacher, the Senior Credit Trainer with Lenders Online Training, where we help lending and credit professionals say yes to good loans. Linda Keith, our company's founder and Chief Credit Training Officer, she's joining us today. Hi, Linda.
Hello. How are you today?
Awesome. Linda, we have yet another question from some of our viewers, and I think it's perfect for today's K-1 Pass-thru series. The question centers around what schedules can we skip as a banker when we're pulling together cash flow of a pass-thru entity? Linda, when you find lenders and credit analysts, they can basically safely think that they can actually skip some things in a tax return. Not everything is necessary, but which ones can they ignore and which ones are actually essential? I think
they kind of like this. They kind of like this part of the training. It's like, oh, you mean I don't have to look at all 57 pages of this tax return? So yes, this session is which schedules matter most, and the corollary is what can I safely skip? So that's going to be our focus in this live stream. And as always, when we started to put this together, it started getting longer than we had in mind. But we want to focus on two pieces because in the training we do for lenders, we don't just focus on where do you get the numbers that you need to put in a worksheet or software. That is one list. Here's the schedules that would give you the sources of those numbers. But we also want to understand the business, understand the entity, understand the borrower. So the same schedules plus a few more help us understand the deal. So what I'm going to start with is I'm going to start off by going through schedule by schedule in a pass-through entity and telling you which ones are important for cash flow, which ones are important for understanding the business. And David and I will pop back and forth with that. But to recap at the end, we're going to do a real quick reminder of if you're doing cash flow, here are the schedules. If you're understanding the business, here are the schedules. So if we hit it both ways, I think that will work best for us today. And I'll actually look up at my notes because I want to be sure I don't miss any of our very important schedules. So with these pass-through entities, we start with page 1, which is pretty much the income statement for that entity. So page 1 and anything that flows to page 1. So there'll be a supporting schedule for other income, a supporting schedule for depreciation, etc. So all supporting schedules that flow to that page also are going to be on our list. Now I'm giving you these in order, but David and I actually look at this next one first and teach our students to do that too. Schedule B is next, but we look at it first because that's where we learn what kind of business is it. There's really no point in deep diving into the income statement when you don't even know what they do. So there's a few other things we look at there, but we like to look at Schedule B to not only see what kind of business they're in, we also will notice cash versus accrual, which we think makes a difference in your understanding of the business. And it's also where we'll find out whether they even have to file Schedule M1, M2, and Schedule L. And what you really don't want you or your team doing is calling a borrower saying, gee, I'm missing a page of the return, when really they're not. It just did not have to be there. So that's what we're going to see in Schedule B. It's also where they have to list other entities that this entity owns. So like the 1040 Schedule E with a list of owned entities, on a Schedule B in the 1065 or an 1120S, it shows entities that they are a 20% or more owner of, and you may have more returns or more K1s you need to go find. So that's important both for understanding the entity, but also possibly for cash flow. So that's page 1, supporting schedules to page 1, Schedule B. Yes, this is going to be a longer live stream than planned. David, what's next after the Schedule B? Although Schedule B is really first, so I guess what's next after page 1?
You move with Schedule B. I go into Schedule K because this is kind of where things are passed from the pass-through entity to the 1040. And that's where Schedules K K kind of originates things. It accumulates a lot of the items that impact the organization as a whole. It talks about that type of income, those type of credits that eventually gets dispersed to the individual owners or partners. So how is that eventually done? That eventually leads to the K-1 that many of us will look at. The K is the parent. The K-1 is the siblings. So that's kind of where we focus on that lands to the personal side. And then we get into, well, my personal favorites. I think you've known this before. I'm a balance sheet guy. I think it's one of the most important statements in the financial statement world. And oh my goodness, it's actually in the tax returns under Schedule L. Now, Schedule L does reflect the balance sheet that you would see in financial statements that has it. So I like to look at that because I think it tells the story of the business once you get to understand that as well. Another few things, what I would say, maybe a couple of favorites. You mentioned the Schedule B very intently in the sense that I want to know about the business per se. And I think that's important for me to do that as well. One thing that shows out in that, and I learned this during COVID, is it showed into part of that was, is the business receiving any type of monies that they're getting forgiveness on or they're canceling? That very seldom was ever checked that I would see over the years, but that really drew my attention after COVID. So that's why Schedule B provided a little more information about the company as well. The other thing I'll touch on that I like is, I know it was on page 1, but depreciation. I do like to look at depreciation schedules if they're attached. If I'm lending to a company that has, a great deal amount of fixed assets, I want to know what they are. I want to know maybe how old they are. Is this company on the latter legs of some of the equipment? Do they eventually need to upgrade that equipment? And I think the depreciation, although I'm following it from page 1, but I think it's an important item that you need to chase down as well. Linda, are we done? Do I have everything yet?
We are not done, but I'm going to piggyback on something you just said. Another way to notice about whether the depreciable assets need to be replaced is on the balance sheets, because you can see the asset less accumulated depreciation. That is books and records, not tax rules. So we haven't had like first year write-off distorting that. And so so now we have two places we can get a feel for that. One is following the depreciation schedule back that may not, but may have a detailed list attached to it. And if not, in the depreciation module in our training, we show people how to tell by where they're listed on the depreciation schedule what things probably are if they've purchased something that is new. So that's a great example of like two different places that not only can you learn something, but if those two don't kind of fit together, then now I have some more questions to try to understand, what is actually going on. So we got us through Schedule L, right? So we're not done. We have the M's. Schedule M1 is where you're going to find non-taxed income for non-deducted expenses. So by definition, those wouldn't be on the front page because they are not taxed, they are not deducted. But on the M1, we'll find, for example, your disallowed meals. There might be some other expenses that are not deducted. And we're going to need to find them there. Non-taxed income, you'll even find tax-exempt interest there. That one's a little tricky because it's also flowing through the 1040, and often we can't tell on the 1040 which it is. So that's one of the ones that we have to play around with in class as well. And then that's the M1. Now we got the M2. And the M2 is kind of the last stop. This is where you're going to find money the owners contributed into the company, and more often, the money that was distributed out to the owners. Here's why this is so important. If you're doing entity level debt coverage ratios, you need to know what they paid the owner before you know what was left in the company to cover its own debt. And with the 1120S, for example, it's not just the distributions, but it is wages, but that was deducted on the front page. On a partnership, it is guaranteed payments, also deducted on the front page. But if you don't pick up the distributions in addition, you really think they have more money to spend on their debt than they actually do. Now, we do have a live stream on how owners get paid. So if you haven't listened to that one, that does jump into some of these different pieces. That's a lot of schedules. It's amazing how many schedules are left out of that list, completely left out of that list. So what we're going to do now is we're going to do that recap I promised you. So David is going to do the, if you're doing cash flow calculations, which ones do you need? And then I'll come back and do the, if you're trying to understand the business, which ones do you need? So David, back to you.
All right, Linda, let's talk about cash flow. And this is from the entity level list first. So page 1 is important, right? We begin with that and all the different supporting schedules that you will see. I'm old school. I will circle some of those to make sure that I have those, and I go back and reconcile to make sure that amount traces there. Schedule B, I want to know here a little bit more is, are there other affiliates, other entities that this company may be related to? Because if so, I want to understand where that is, and I'm going to probably get those tax returns as well, and whether that if Schedule L's and M's, which we just got done, if it is required or not, because sometimes it's not required if you do not meet certain thresholds.
Yeah.
Schedule K is a given because of the additional income and expenses that are flowed through. I need to understand that because they're not on page 1. So I want to understand that as well. Schedule L, this is probably when I'm doing a shortcut for debt. Maybe I don't have a debt schedule from them. I didn't ask them, but I could do a shortcut with the current maturities of long-term debt. We've done that as well. We've got a live stream that'll talk about that as well.
We do.
Schedule M1, non-tax. Linda just finished that. That's important to me to understand those incomes that are not taxed, so they're not flowing through, but it is income. Same way with non-deducted expenses. They may not be deducted, but the cash went out the door, so we need to understand that as well. And lastly, we talk about the M2s, owners' capital contributions and distributions. They impact the owners and they impact the entity as well. Linda?
Yep. You did remind me of something, David, which always happens on these live streams. I'm listening to you going, oh, I want to say something else. Shortcut for debt. Some of you are thinking, but Linda, we would have all the debt schedule. You would if you're lending to this entity, but what if this is an entity also owned by the guarantor, but you're not lending to them? Or what if the guarantor, what if the 1040 owner is actually your borrower? And so you're not getting as much information on this entity as you would if you were lending to them. So that shortcut for debt often comes in when you're not lending to that entity and therefore you just don't have the detail. And mortgage lenders use the shortcut for debt all the time. All right, so back to me for this list of schedules required when you're trying to get your mind wrapped around this business. Maybe they're new to you, but maybe not. Maybe you haven't really looked at their information since last year and you're trying to understand, have things changed? How are they doing with the tariff problems? How are they doing, with the pandemic when we were into that mess? So all kinds of reasons we use these tax returns kind of as substitute financial statements to understand the business. So we're back to page 1. Everything supports page 1, Schedule B, but this time to notice the type of business and if they're filing on the cash or accrual basis. Schedule K to notice additional types of income and expenses and if they're consistent with your understanding of the business, right? So it's not just what the numbers are, but for example, if they had a bunch of capital gains, gee, I wonder what they sold. And are they selling off assets that are critical to the business? So it's not quite the same as what are the numbers, but rather understanding what's going on. Then we have Schedule L. This time to do the David deep dive into the balance sheet, understanding things. One of the things I look for example, if there's a significant increase in long-term debt, I go right up to the long-term assets and see if there's a corresponding increase. In other words, are they borrowing money to buy assets? And if not, why are they borrowing long-term money when I cannot see assets increasing? Right? That to me, that would be a red flag, which doesn't mean deal killer. It just means I need to understand. If they're borrowing long-term to cover losses, well, that's different. If they're borrowing long-term to expand the business in a way that doesn't buy assets, that might be fine. I just want to know what are they doing? What are they doing? If they're borrowing long-term to be able to afford the distributions that they want to pay to their owners, another thing I'd like to notice. So those are all things I'll notice from a Schedule L. And then Schedule M2, we looked at that for cash flow calculation, subtract distributions, add back capital contributions. I might add, when there are significant capital contributions, am I going to add them? I'm not sure. It depends on whether we add distributions to the owner. We subtract the distributions from the company. I'm not sure I said that right. We add the capital contributions back to the company. I would pause and wonder, well, what's normal for them? Really on both sides. And if there are capital contributions that are unusual, then ask yourself, why do owners put money into a business? They don't unless something's going on, right? Is the business getting ready to expand? Are they trying to make it look better for purposes of selling it? So it's not just number crunching. It is, do these distributions and capital contributions, are they consistent with what they normally do? Are there any big questions that I have? If those distributions are causing a deficit. Now, here's one. This is the bonus for this session. You might think that if they're taking distributions that create a deficit, that is totally a bad idea. And it sounds like a bad idea. But what if you did not include some significant but non-recurring income in your calculation? What if they received a huge lawsuit settlement? And when you did your calculation, you of course didn't count on that. But that money was there, and the owners took advantage of that to take the money home and do something else with it. Nothing wrong with that. So if your liquidity is still strong and all your other numbers are still strong, even though that particular year you counted all the distributions against them, maybe they were not usual. Maybe they were taking home kind of a windfall from something else. So we just have to be sure we don't do these knee-jerk reactions, and that when things don't seem quite right, we pause long enough to understand them. All right, checking my list. I think we do have this now. There's a couple of live streams that I want to mention to you. One is called the Cayman Islands, and it is actually helping people go through the schedules they need to go through. So it's another one of those things that we made up at Lenders Online Training. Cayman Islands, Quack Like a Duck, 6 Ends. These are all training tools that we use that we are sharing with you in these live streams. And another one is which entities are pass-through items and what you can and can't tell by looking at that back of the 1040 Schedule E about those entities. That is it for this session. We encourage you. That was a lot, wasn't it, David?
Yeah,
For 2 minutes, but these just get longer than that.
Our K-1 and Pass-thru series has always been filled with conversations, but today was quite the conversation, Linda. We talked for a long time.
Well, truly, we could keep going,
Yes.
but we won't.
But I think it's important for our listeners to know that a lot of these questions come up from whether it's even my times in class when we're training individuals, or they email us at experts at lendersonlinetraining.com. We've asked the experts. We've had those questions as well. But this is what really originates some of these questions, because it's on the top of their mind. It's confusing sometimes when you're dealing with pass-through entities. And hopefully these conversations give you an opportunity to look at things at from a different perspective. So we always love your comments. We actually like our questions, much like we received today. So please contact us at experts@lendersonlinetraining.com. That's experts@lendersonlinetraining.com.
And David, let me mention, there's also an Ask the Experts email that you can request. I think we had that on the screen a moment ago. We'll have it on the screen when we're done. You go up to lendersonlinetraining.com, Ask the Experts. And what that is it is a weekly email. The subject line actually says what question we're answering. Those questions do come from you and people like you. And so you can just look at the subject line and go, oh, not interested, don't read it, just, get rid of it. Or I'm not, but somebody else on my team needs this. Or, oh, that's a question I want to know about. They are just blog posts then that are the answers to the questions that we're getting through that email. So we're either do a live, we'll always answer your question, but then we'll maybe do a live stream, maybe do a blog post. And if you decide to be in that Ask the Experts group, then each week you're going to see what you got. And of course, you could unsubscribe if you don't find it's helpful, but truly people don't unsubscribe from that much. That is it for today. Thank you very much. And we will see you next week.
Bye, everyone.